Hello, it's Gustavo with Axial Home Loans, and today I'm going to talk to you about the 4 main reasons why people don't qualify for a mortgage. The Las Vegas real estate market in 2020 is very low on inventory. That means that if you're going to make an offer, you should expect to have multiple offers. So today I'm going to give you the 4 top reasons why your mortgage loan would be denied. The top main reason I've seen people not being able to qualify for a loan is they don't have enough for a down payment and closing cost. So let's start with the down payment first. Typically, down payments can be as low as 3.5% as for an FHA loan. On a conventional loan, they require a little bit more, which is 5%. So keep in mind, that's the down payment that you typically need for an FHA or conventional loan. Let's move on to closing cost. Closing costs are often overlooked. People pay attention to the down payment, but they don't pay attention to the closing cost. The closing cost could be as much as 3.5% on an FHA or conventional loan. Now keep in mind you're paying for things like escrow, title, your property taxes, insurance, appraisals, and there are other things included in your closing cost. But you need to plan for that when you're looking for your home and you figure that this is going to be my down payment and this is going to be for my closing cost. In a market where there's multiple offers on properties, it's very difficult to get a seller to help pay for some of your closing costs. For that reason, I highly suggest that when you're in the market for looking for a house, that you have your down payment, either the 3.5% for FHA or 5% for conventional loans. Now, there are other programs, and I've done other videos. If you check out my other video, Home is Possible program, which will talk about down payment assistance. But in this video, I'm specifically going to talk about FHA and conventional financing, what you need in order to qualify for that mortgage, and the top reasons why you get denied. So let's move to the next reason why I see a lot of clients having issues with getting their mortgage denied. It's your credit score. Your middle credit score has to be above a 620 in order to get approved for the majority of programs. So why do I bring up your credit score before you shop for a mortgage? Well, it's important to know how much debt you have and what your credit file looks like. If your score is in the 500s, then you know you need to do something to raise those scores in order to qualify for a mortgage. When it comes to credit, one of the things that I see quite a bit is too much debt, meaning credit cards, automobiles. So before you apply for a mortgage loan, you need to take a close look at your debt and figure out what you can pay down. Are there any collections or any judgments that need to be satisfied? You need to take a close look at your credit and make sure that you can qualify for that mortgage. Generally, they do not allow any judgments or collections in order for that loan to be approved and closed. When it comes to credit, they're looking at 3 credit bureaus: TransUnion, Equifax, and Experian. They're picking the middle score. So you may have one score much higher and one score much lower, but they pick the middle score. So please pay attention to your middle scores for qualifying for a mortgage. Now keep in mind, this credit rating is constantly moving with lenders. During COVID-19, they're raising the requirements, meaning they're requiring higher credit scores in order to qualify. As a general rule, I tell clients you need about a 620 middle score in order to start qualifying for the majority of programs out there. The next factor you need to pay attention to is income, where your income is derived. Most people are either working in a W-2 job or self-employed. That's where they're receiving their income. So in order to qualify for a mortgage, the biggest reason I see people get denied is that they don't have 2 years employment, meaning they have 1 or 1.5 years in the job, not completing the 2-year employment. There are some programs out there that do allow for certain exceptions, but for today I'm talking about FHA and conventional loans. We need 2 years employment. The next factor I see in people not being able to qualify for a mortgage is the income. And it falls into 2 categories. Either you don't make enough to qualify, or you haven't been on the job long enough, whether you're self-employed, we need 2 years of experience in that field with tax returns, or you work for someone in a W-2 job where we need 2 years W-2s and paycheck stubs. So the biggest problem I see here with clients not qualifying for a mortgage when it comes to income is that they're not making enough money in order to qualify for the mortgage that they're looking for. So here's a good rule of thumb. No more than 30% of your gross income can go to your mortgage, which includes your insurance, your property taxes, your mortgage insurance, and if you have any homeowners association dues. If you add all those up, no more than about 30% of your combined income can go to pay that mortgage. And this includes everyone that's going to be qualifying for the mortgage. So the more people that you have qualifying for the mortgage, the income rises. But keep in mind, you have to keep your eyes on how much debt you carry. Typically, they would not allow more than 45% back-end debt ratio. What does that mean? If you add your new mortgage payment with taxes, insurance, mortgage insurance, homeowners association dues, and all of your monthly liabilities, such as car debts, student loans, credit cards, no more than 45% of your income can go to all that combined debt. This is the biggest reason I see people not qualifying for a mortgage. They simply do not make enough money for the home that they are looking at. So they have to adjust the purchase price down in order to qualify for that mortgage. So what can you do in order to help you qualify for a mortgage so that there is no issues when it comes to your income or employment? First, you need 2 years. 2 years of W-2s in the same job or in the same type of job. When it comes to self-employment, you also need 2 years, but in this case, you need 2 years tax returns. So when you're looking at your tax returns, they're looking at your income after the expenses. That's what they use to qualify. And they usually average that out over 2 years to give you a monthly income. So as you can see, self-employed borrowers have a hurdle that they have to get over. They either have a ton of expenses or they made a lot of income and they paid a lot of taxes. Either way, you do need 2 years tax returns in order to qualify for an FHA or conventional loan. In the Nevada housing market today, since the inventory is so low and there's multiple offers on properties, it's so important not only to be pre-approved, but to be committed to a lender that has checked all your documentation, your income, your credit, your down payment, including your closing costs, so that you know that all verifications have been done. So that when you're putting your down payment in that house, you know that you're going to close on that property because all the proper documentations and the requirements have been met on your loan. So the reason I'm going through this is I'm hoping to help you through this process. Maybe you're out there looking for a home and you don't know what you qualify for. Well, with multiple programs at your disposal, I can help with that. I hope this video helped you a little in regards to understanding some of the hurdles that you have to overcome in order to qualify for a mortgage, especially in Las Vegas, Nevada, where the housing market is very competitive. Thank you for taking the time for watching this video. I hope these tips have helped and clarify a couple of things on why some people get denied on a mortgage. I'm here to help you. If you have questions on your credit or if your income qualifies or what programs are available to you, at no cost, a free consultation and no obligation, I would love to answer any questions you may have. Thank you again.